Hey guys, Alessio, hope you're well. So as we're approaching the end of the year, getting close to Christmas and the holidays, let's take a look at the chart of the stock markets. And I'm going to explain to you what this recent drop and also this chart of the stock market, plus also this chart you're seeing here, which will have an important meaning for what could happen to the stock markets in 2025. Could this be a significant warning to the stock markets and perhaps even Bitcoin? And if so, what does it mean as we start 2025? All right, guys, join me. All right guys, welcome back. And let me just say thanks very much indeed for tuning into my videos again. It's a great pleasure to be doing a video for you guys after some time. I know it's been quite a while since my last video. So as you probably guessed, I'm not in the UK, not in London. No, I'm actually in sunny, beautiful Florida, staying with my relatives here. And for the first time, I brought my mom from the UK to Florida. She's never seen Florida before, and my mom is really enjoying the amazing weather. By the way, let me just say, when I left the UK, when I left London, the weather was freezing cold. And to come to this warm, sunny, and green place in America, I mean, I gotta be honest, guys, I love England, but I do not miss it right now. So guys, let's take a walk here and I can talk to you about the charts and the markets. And in fact, in this particular video, I want to explain to you what this chart you're seeing here, what it potentially means. That is a very important meaning for the stock markets. And I'm going to explain to you if it's a potential warning for the markets or not. And let me just say this before I start, that we're getting very close to Christmas and the holidays. So I want to wish you a phenomenal Christmas and holiday. I don't know what you guys are planning to do for Christmas. I'm going to be planning to maybe spend more time relaxing and reading a bit more. I'm currently reading a book by the French writer Molière. By the way, guys, before we continue, just want to quickly mention this. If you're looking for a safe and reliable trading platform which provides real-time data on stock markets, stocks, and crypto, then check out Radex, who is our sponsor for this video. And as you guys know, any money we get from sponsors, we give to charity. More on Radex at the end of the video. All right, guys, let's walk this way. Now, before we start, let me say this, that some of you are going to probably think, based on the title of this video, and also what I'm going to talk about, that you might think, oh, here we go again, Alessio is going to be bearish, and it's going to be negative about the markets. Guys, if you look back, at least for the last couple of years, since 2023, the majority of my videos about the stock market and Bitcoin have been very positive and bullish. In fact, you might remember, it was in my video exactly this time of year in Florida that I was extremely bullish on both Bitcoin and the stock markets. And both Bitcoin and the stock markets have gone up significantly since that video that I made here in Florida 2 years ago. So guys, it's simply not true that I'm always bearish about the markets. I try my best to give you a reliable, objective analysis of the markets. By the way, guys, I'm not trying to tell you that I got everything right in the last couple of years. No. All I'm saying is that the majority of the time I've been right more than wrong. Are we going to make wrong calls and forecasts? Yes, we're human. We're going to make mistakes. That is normal. All right, guys, let's talk about the market. So as we've seen a pullback drop, quite a sharp drop in the stock market, in the S&P and the Dow recently, and especially after the Federal Reserve meeting where they cut interest rates. By the way, guys, I'm not saying that the Federal Reserve decision to cut rates caused the market to drop. No, guys, absolutely not. If you've seen my previous videos, you know that this whole idea of fundamentals or news causing market events is completely dubious and nonsense. It is not news or fundamentals that causes price action, it's sentiment. It is the emotions and the irrational behavior of investors and participants in the marketplace. By the way, if you've been watching our member videos, then you'd know that I said if the stock market, the S&P, broke down below 6,000, that actually could produce significant downside risk, which pretty much is what happened. But in any case, let's talk about something much more interesting and exciting, and that's this chart that you're seeing here, courtesy of Manuel Bly, my good friend Manuel Bly of the DowTheory.com. Now guys, according to Manuel Bly of the DowTheory.com, he said in his recent newsletter that there has been an uninversion of the 3-month versus the 10-year yield curve. Now I realize it sounds like a mouthful, but in simple terms, the 3-month versus 10-year yield curve, which had inverted some time ago, I believe it inverted back in 2022, has now uninverted. And you're probably wondering, well, so what? Well, here's the thing, guys. According to Manuel Bly, and according to this chart you're seeing here, usually, whenever this particular yield curve, again, the 3-month versus 10-year yield curve, whenever it uninverts, well, the result is not that good. Firstly, Manuel Bly says that whenever there's been an uninversion of the yield curve, as per the 3-month to 10-year yield curve, there has been a recession about 6 to 18 months later. Okay, so 6 to 18 months later, after an uninversion of the yield curve, as per this chart, usually a recession, an economic downturn follows. But, and here comes the interesting part, even though it takes some time, about 6 to 18 months, for a recession to occur after an uninversion of the yield curve, it is actually much more negative for the stock market in the next several weeks and months. And as I'm sure you know, the economy is lagging behind the market. Okay, so the economy is usually slower. So sometimes you see a reversal and a drop in the stock market much sooner. Again, sometimes many months, sometimes years before a recession occurs. Okay, so even though I'm saying that after an uninversion of the yield curve, a recession may occur 6 to 18 months later, there is a chance that the stock market could top and reverse direction into a downward trend much sooner than 6 to 18 months. Now, I should say this, that Manuel Bly does say that just because there has been an uninversion of the yield curve, this does not mean that we're going to see a recession immediately, and it does not mean that the stock market is going to top immediately. It could take some time. The market could still rally a bit further higher before it tops. Now let's take a look at some examples. As you can see on this chart, again courtesy of Manuel Bly, TheDowTheory.com, you can see in the past 24 years there was a signal back in the year 2001, right at the beginning of the dot-com crash, as you can see right there. So first of all, you can see the uninversion of the yield curve back in 2001, and then pretty much soon afterwards the market topped in 2001, and then we saw a reversal and a 50% crash and drop on the S&P from its highs. Now let's take a look at an example in the year 2007. Famous example, of course, you can see right there an uninversion of the yield curve occurred in 2007, which then was very close to the top in the stock market right there. The Great Recession, of course, then followed. And then the S&P crashed by 50% from its highs all the way to 2009. And as you can see, there was an uninversion of the yield curve in 2019. That was actually some months before, again, the market topped and then crashed, as you can see there, in the COVID crash of 2020. And by the way, the stock market rallied a bit further higher before it dropped after the uninversion of the yield curve. Now, as you can see, guys, this is now the most recent example, the most recent signal, which occurred, by the way, this month in 2024, just recently, by the way, on the 13th of December. So this is now a major warning sign to the stock market that potentially in the next 6 to 18 months, we could see a recession, but perhaps sooner than that, maybe in the next several weeks and months, we could see a top in the stock market and a potential reversal into a downtrend. Now, as to how severe a drop or a market crash we might get, I really don't know. But as you saw in the previous examples, the drops and the crashes that occurred after the uninversion of the yield curve was anything from 30 to 50%. And again, I want to be clear about this, that Manuel Bly is not saying that just because we have an uninversion of the yield curve, that the market's going to crash and drop immediately. No, he's not saying that. In fact, let me read for you what Manuel Bly says in his newsletter. He says, after yield curve uninversion, the stock market typically drops after some lag, with recessions following 6 to 18 months later in most historical cases. We can observe that the stock market occasionally rallies further for some weeks before taking a plunge. Thus, the end of inversion does not necessarily spell immediate doom, but warrants close monitoring. So essentially Manuel is saying, look, we need to be careful. We need to be very cautious, even though the market could continue rallying further higher in the next several weeks, maybe even the next few months. By the way, guys, if you haven't yet checked out Manuel Bly's newsletter, TheDowTheory.com, do check it out. It's really worth it, and it's phenomenal, fantastic. So guys, given this recent signal, again, the uninversion of the yield curve we've just had in December of 2024, I'll give you my personal thoughts. I think Manuel Bly is correct. I think that just because we have an uninversion of the yield curve this month, this does not mean necessarily this doom and gloom and become extremely scared of a potential crash in the stock market. No, it does not mean that. It does mean we need to be on our guard, again, be more cautious, but it does not mean, and in fact Manuel Bly also says this, it does not mean at the present moment that it's a sell signal. It does not mean that. Again, all it really means is that we need to closely monitor what's going on in the stock market and just pay very close attention to what may happen in the next few weeks. If in the next few weeks, maybe by the end of this year or in January or February, if we get some kind of a reversal signal or a topping signal, something that indicates with a high probability that the stock market is likely reversing trend and falling into a downward trending market or sign of a top, something like that, then sure, we'll act on that near the time and become bearish if that happens. Again, it's an if. It's not a certainty, it's not a guarantee, as I'm sure you know. So for the moment, based on what I'm seeing on the charts and based on the data I've looked at as well, again, if you've been watching my member videos, you probably know that I'm bullish on the stock market from September. I even showed you more recently that I'm still in the market. However, I'm looking to take profits should the market indicate that it's a good time to do so. So personally, guys, I'm seeing the recent correction or drop we're seeing in the stock market here, the recent pullback after the Federal Reserve meeting, I'm seeing that as a temporary correction or drop at the moment, based on the data we have. As I mentioned, as yet, there is no sign of a top in the market. As yet, there is no sign that the bull market has completed or ended. So my view is that as long as the stock market, as long as the S&P stays above this uptrend line that you see here on the chart, so we're above this trend line, provided the stock market, the S&P, remains above this trend line, then I still think the path of least resistance and the trend remains to the upside. So even if we see more of a pullback, even if we see more of a correction, a bit more decline in the next few weeks, for example, I'm still seeing this drop as a temporary correction, a temporary drop or pullback before we continue the trend to the upside, before the uptrend continues and likely move to new all-time highs. All right, guys? So I'm still remaining long-term bullish on the stock market despite this recent sharp drop and pullback we're seeing in the stock market. However, guys, as I just explained, it does not mean we're just going to close our eyes and pretend there is no warning. There are warning signs. As I just explained, this uninversion of the yield curve is a warning sign. It just means we need to be more cautious and keep an eye on anything that may go wrong. For now, I still think that the trend is your friend, and once this correction here, this pullback completes and finishes, I still think we could see another move to new all-time highs, likely in the next several weeks. If not by the end of this year, then perhaps in January or February. Before we finish this video, I just want to quickly mention the superb trading platform provided by Radex. Radex provides a secure and advanced trading platform with state-of-the-art technology. You get real-time data on stock markets, cryptos, metals, forex, and a whole bunch of other markets as well. Another good reason why you should try out Radex is their low spreads and 24/7 availability and customer support. And you can open an account with a deposit of $200. Make sure you use the link in the description to get started with Radex. And as mentioned, any money we get from sponsors we give to charity. Alright guys, I hope this video has helped, and if it has, please give it a like. Thank you very much indeed.